like the FPO, of course, the Hindenburg issue and their debt picture as well right now. So Nimesh is here with the key takeaways from that interview. Nimesh?
Hi, Pavitra. So we had an extensive, interview with the group CFO of Adani, and few things stand out for me from that entire 40-minute interview. The first one is on the Adani Enterprise FPO. That's going to be a big talking point because the FPO technically closes tomorrow, which is 31st of January, and they've very clearly mentioned that they're going ahead with the FPO. Not only that, they're also going to continue with the price band, which is between 3112 to 3276. Remember, the anchors came in at 3276. Now, we put out the subscription details. It's hardly been subscribed as things stand as we speak, but the expectation is that this will come. That's the confidence that the CFO has spoken about. That they're very confident that the issue will go through. There will be enough demand in the FPO as well, and they're going ahead with the initial schedule of the issue closing tomorrow, and they've not changed the price band as well. So that's on the Adani Enterprise FPO, which closes tomorrow. That's the first one. The second one was on the group debt and the exposure of the Adani Group in the Indian banking sector. At a group level, the CFO mentioned that they have a gross debt of close to $30 billion, of which $4 billion is cash and cash equivalent. Closer to $4 billion is what he mentioned. And within that, for the Indian banking sector, the overall exposure is close to 23%. In terms of actual numbers, it works out to around $9 billion if you include the working capital lines as well. So all put together, the net debt of the Indian banking sector for the group is $9 billion, which is not very large if you compare the balance sheet size of the PSU banks as well as the private banks. So that was a clarification as far as the debt is concerned of the Adani Group. And the last one was a clarity on the on Ambuja Cements. Well, there's a lot of fear that because of the shares getting incumbent for Ambuja Cement, there is a fear that most of the foreign lenders will sell the stock given the slam down which happened in the last 2 days. To that, the CFO has very clearly clarified that these are not technically pledged shares with the foreign lenders. It's because of the Indian regulatory system. It has been classified as incumbent, and hence there is no fear of any foreign lender or any institution selling the shares of Ambuja Cement. So 3 big clarifications. 1, the FPO is on schedule with no changes in the price band. 2, the gross debt is $30 billion backed by cash assets, and the India exposure is very less. And 3, there is no risk of any pledged shares getting sold in Ambuja Cement.
Okay, thank you very much, Nimesh, for so concisely, putting that in front of all of us. In fact, let's hear out what the group CFO, Mr. Singh of Adani Enterprises, had to say about the FPO, SEBI probe, and the Hindenburg research.
We are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors was going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there. But there will be some pullback in the retail given such pricing differential and the volatility. FPO will go ahead on the same conditions that we launched. Gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. Because the way the domestic bank is, there was some sanction limit. So if I just go that on a sanction basis, it will be about 9 billion. The first thing is that 0% of Ambuja shares are pledged. What happens is that under SEBI's regulation, SEBI just has a heavier regulation, which is a good regulation, which is simply that please report encumbrance. So if we say that we will hold 63% under SEBI strict reading of it is considered encumbrance.
The response that came in from the Adani Group, again, just a caveat that this interview was recorded last evening before Hindenburg's latest response, which came in actually this morning. And I just want to bring you up to speed with what Hindenburg is now saying. So this is the latest in the story so far. First of all, Hindenburg has completely denied one sort of claim that Adani made in its response, saying that it's a flagrant breach of applicable securities and foreign exchange laws. So this is something that Hindenburg Research is absolutely denying, that they have not committed any such breach of securities laws. That's point number 1. Second, they go on to say that out of their 88 questions, only 62 Adani has failed to specifically address. The remaining questions which Adani did answer, the group largely confirmed or attempted to sidestep our findings. Now, let me come to the heart of the matter. One of the major allegations that Hindenburg has pointed out in its report earlier, and they repeat that in their morning response, is their allegation of related party transactions between Mr. Vinod Adani and the Adani Group. Now, this is something that the Adani Group has refuted in its response. Let me just quote. Our report alleged that Adani Group has engaged in billions of dollars in suspicious dealings with its chairman's brother, Vinod Adani. Adani brazenly argued that Vinod Adani is not a related party to the Adani Group. However, Hindenburg goes on to say, we believe investors should regard Vinod Adani as a related party. So this is one major bone of contention between the two parties. A quick last point. There is some reference to a Chinese national as well. Hindenburg goes on to say that Adani Group has not even attempted to clarify its relationship with a Chinese national, Chang Chung-ling. Now, this Chinese individual allegedly has some linkages or some role in the Augusta Westland scam. Again, these are, I'm simply quoting from the Hindenburg response that came in this morning. These are all allegations. And the final conclusion that Hindenburg has drawn is Adani's response largely confirmed our findings and ignored our key questions. So it's a war of words, and it continues from both sides, at least as of now. I just want to put on the table the number that's relevant from an FPO perspective. Yash sent us the latest details. These are as of, I think, just after 9:30 or 10. The total subscription was 0.01 times. NII was 0.01. Retail was 0.02. Employees was 0.07. So the numbers on the FPO haven't moved too much from what we saw on Friday. Story continues to unfold.
This is as of 10:50 a.m., as you can see on the screen.
Yes.
So that's just 1% which has been subscribed so far.
Oh, absolutely. And this is important for us to track. We will, of course, keep bringing you updates on, how the FPO subscription is looking. But for now, let's also bring in